Morning, everyone. So, if you have any doubt about last lecture, then please let me know. Till the time everyone is settled down, we will solve the doubts of last session. Anyone is having any doubt, just let me know. Anyone have any doubt? Yes or no? Everyone is clear with the concept we studied in last lecture. Okay, chalo. Next section is payment on transfer of certain immovable property other than agricultural land. Here, the term agricultural land means rural agricultural land, meaning thereby, if you transfer any immovable property, if you transfer any immovable property, then who will pay the consideration to you? See, what we have learned, the basic funda of TDS is the payer is liable to deduct TDS, right? So, in case of transfer of immovable property, who is payer? Buyer is payer, right? And who is recipient? Seller is recipient. So, while making the payment for transfer of immovable property, the buyer is responsible to deduct TDS on such transfer. Here, the rate of TDS is 1% and the threshold limit is 50 lakh rupees. That means if you are purchasing any property which value is more than 50 lakh rupees, more than 50 lakh rupees. Okay. So if the consideration is 50 lakh, more than 50 lakh rupees, or the stamp duty value, see, you all have learned the concept of section 50C, which says that if the consideration is less than 100 and if the stamp duty value is more than 110% of consideration, then the stamp duty value is deemed to be your sell consideration. So here the same concept is applied. So if your consideration or stamp duty value is more than 50 lakh, then you have to deduct TDS on such transaction in case of purchase of immovable property. Every transfer is responsible for paying any sum as consideration for transfer of immovable property, land other than agricultural land. Here the agricultural land means rural agricultural land, because the rural agricultural land is not covered in the definition of capital asset, and gain arise on rural agricultural land is fully exempt. To resident transfer, here the transfer should be, that means the seller should be resident, shall deduct tax at the rate of 1%. Here, my dear friend, those exemption that individual and HUF is not given. So this question is applicable to everyone, irrespective of your turnover in last year as an individual. Or stamp duty value of such property, whichever is higher. So you have to deduct TDS on actual consideration or stamp duty value of property, whichever is higher. Agricultural land means rural agricultural land. So in case of transfer of urban agricultural land, the provision of TDS is applicable. Okay, the threshold limit is 50 lakh. So when you require to deduct TDS when the consideration is more than 50 lakh or the stamp duty value is more than 50 lakh. The time of deduction again here is the credit or payment, whichever is earlier. Threshold limit is 50 lakh. Non-applicability of TDS under section 194 IA. So in case of compulsory acquisition of immovable property, section 194 IA is not applicable. Why? Because there is a specific section called 194 LA is given. In case of deduction of tax or in case compulsory acquisition of property. So if the case is compulsory acquisition of property, then the TDS is not applicable under section 194 IA. The TDS is applicable in case of 194 LA. No requirement to obtain 10. Here, my dear friends, 10 means tax deduction account number. Say, for example, for filing your return of income, you need PAN. Same way, you need to file a return of TDS in which you have to mention that what amount of TDS is deducted for what purpose, for on what PAN, right? So you have to obtain in 10 and on the basis of your 10, you are able to file your TDS returns. But if you are deducting TDS under section 194 IA, then requirement for obtaining 10, that is tax deduction account number is not required. You can file, you can inform a government that, say for example, on account of Mr. X, I have deducted so and so amount of TDS under section 194 IA on the basis of your PAN. So 10 is not required when you are deducting TDS under section 194 IA. Meaning of consideration. So consideration includes everything, that is the electricity charges, lifetime maintenance, development charges, anything is considered as consideration. Let us discuss the illustration number 7. Mr. X sold his house property in Bangalore as well as his rural agricultural land. Here the rural agricultural land is sold by Mr. X for a consideration of 60 lakh and 15 lakh. So for house property in Bangalore, the consideration is 60 lakh. And for rural agricultural land, the consideration is 15 lakh, the sale price. To Mr. Y on 1st August 22. He has purchased the house property and land in the year 21 for 40 lakh and 10 lakh respectively. So here, the cost is 40 and 10. The stamp duty value on the date of transfer, that is on 1st August 22, is 85 lakh and 20 lakh for house property and rural agricultural land respectively. So stamp duty value here is 85 lakh and here 20. Examine tax implication in the hand of Mr. X and Mr. Y and TDS implication. So here, my dear friend, Mr. X sold the house property. So in case of Mr. X, there is a capital gain, short-term capital gain. Why? Because the holding period is less than 24 months. So what happened here? Here, the stamp duty value is more than 110% of consideration, right? 110% of consideration is 66 lakh and the stamp duty value is 85 lakh. So in this case, your stamp duty value is deemed to be your sale consideration as per section 50C. So in the hand of Mr. X, what will be the amount of short-term capital gain? 85 lakh minus 40 lakh cost. So it comes to 45 lakh short-term capital gain in case of Mr. X. Now in case of Mr. Y is purchasing a house property for a consideration less than stamp duty value. And the difference between consideration and stamp duty value, it comes to 25 lakh. So as per section 56 to 10, you have to check this difference is higher, 50,000 or 10% of consideration. Mohammed, here the indexation is not available because there is a short-term capital gain. Indexation is available in case of long-term capital gain. So here, the difference between stamp duty value and consideration is more than 6 lakh. That is the higher of 50,000 or 10% of consideration. So in this case, this 25 lakh is taxable as income from other sources in the hand of Mr. Y under section 56 to 10. Everyone clear with the tax implications? Yes or no? Tax implications clear, everyone? Now let us discuss the TDS implication. Now who is the buyer in this case? Mr. Y is buyer. The consideration is 60 lakh. The stamp duty value is 85 lakh. Whichever is higher. So higher is 85 lakh. Right? So Mr. Y is responsible to deduct TDS on 85 lakh rupees at the rate of 1%, which comes to 85,000 under section 194 IA. Right? On rural agricultural land, no TDS is applicable. Why? Because it is excluded from the section. And same way, the capital gain is also not applicable in case of rural agricultural land because the rural agricultural land is not covered under the definition of capital asset. Everyone clear with this provision? Yes or no? Chalo, next section is payment of rent by certain individuals or HUF. Payment of rent by is more than 50 lakh, then they are responsible to deduct TDS under section 194I. But those individual in HUF, if they are doing business and in last year their turnover is less than 1 crore and the professional receipt is less than 50 lakh, then they are responsible to deduct TDS on rent under section 194 IB. So everyone is clear in under 194 IB. Mr. Anand, for calculation of short-term capital gain, you need to learn the chapter of capital gain. Here the stamp duty value is 85 lakh rupees and the cost is 40 lakh. So difference between stamp duty value 85 lakh and cost 40 lakh comes to 45 lakh. This is the case of the 45 lakh is short-term capital gain. Kavita, if here the TDS is applicable on stamp duty value or consideration, whichever is higher. So if the stamp duty value is less than 50 lakh and consideration is more than 50 lakh, then the TDS is applicable on consideration value. So under section 194 IB, the payer is those individual and HUF whose turnover in last financial year is less than 1 crore, and if they are in the profession, then the professional receipt is less than 50 lakh. Clear, everyone? Who is payer in this case? Why? Because those individual whose turnover is more than 1 crore in last financial year is liable to deduct TDS under section 194 I, not under 194 IB. Everyone clear the difference between difference of payer between 194 I and IB? Yes or no? Here the rate of TDS is 5%. The TDS is required to be deducted at the rate of 5%. The threshold limit is 50,000. If the rent amount is 50,000, is more than 50,000 for a month, not for the year. Here you have to check the rent amount for a month. So if you are staying in rented house and the rent amount is 55,000 per month, then you are liable to deduct TDS under section 194 IB as an individual. So here the limit is 50,000 per month. So if your rent is more than 50,000 for a month or part of the month, then you are responsible to deduct TDS under section 194 IB. Time of deduction. Here you are not required to deduct TDS on every month. Here the TDS is required to be deducted from last month of the rent. So if you are taking a property on rent for full financial year, say for example, the rent amount is 50,000 per month. So 194 IB is applicable, right? So in this case, you are required to deduct TDS from the rent of for the month of March 22. That is the last month of financial year. Say for example, if you have vacated the property in the December, then the TDS is required to be deducted in the month of December. That is the end of tenancy period. That is the last month of tenancy period. You are required to deduct TDS. Again, the TDS is required to be deducted payment or credit, whichever is earlier, but you have to check the payment rate of last month of financial year or last month of vacancy. Everyone clear up till now? Here also the PAN is not required. You can file your TDS return based on PAN. Everyone clear up till now? Yes or no? Kavita, your doubt is clear. Anand, your doubt is clear. Yes or no? Rent means any payment by whatever name called under any lease, sublease, tenancy, agreement, arrangement, anything. You can call it as a lease payment or rent payment or anything. Deduction not to exceed rent for last month. I is applicable to those individuals whose turnover in last year is more than 1 crore. And 194 IB is applicable to those individuals whose turnover in last year is less than 1 crore. Clear, Nikita? See, the 50,000 per month limit is you have to check for each house separately. No, for if the rent is paid by HUF, then this section is applicable to HUF. Up till now, everyone clear? Yes, you have to deduct TDS for entire amount, that is 55,000 into 12, whatever amount comes into 5% is required to deduct as TDS. We will discuss one illustration in which the entire provision is covered. Now the deduction not exceed the rent of for last month. Here what happened, my dear friends? Say for example, you need to obtain a PAN of owner. So if the owner is not giving his PAN to you, if the owner is not giving PAN to you, then you need to deduct TDS at higher rate, that is 20%. So if owner is not providing you PAN, then you are required to deduct TDS at the rate of 20% for entire year's rent, okay, from last month. Now say for example, the last month rent is 55,000 and at 20% the TDS is 1 lakh. So the TDS amount is more than the last month rent. So in this case, your TDS is restricted to the last month of rent. Why? Because owner will not give you the excess amount to you, right? So in that case, your TDS is restricted to last month rent. In case when the PAN is not provided by the owner and you are required to deduct TDS at 20%, then your TDS is restricted to last month rent. You will better understand by illustration number 8. Mr. X, a salaried individual, pay a rent of 55,000 per month to Mr. Y from June 2022. Now here Mr. X is a salaried employee, so he does not have any business in last year, right? So the section 194I is not applicable, but the rent amount is more than 50,000 per month. So section 194IB is applicable. Is he required to deduct tax at source? Yes. Mr. X is required to deduct TDS under section 194IB. Why? Because per month rent is more than 55,000 and 194I is not applicable. If so, when is he required to deduct tax? Also compute the amount of tax to be deducted at source. Now the date of vacant, the date on which Mr. X vacated the property is not given. That means the for whole year from June 22 to March 23, Mr. X is a tenant for that property. So the TDS is required to be deducted from the last month of financial year, that is the 31st March 23. So what is the amount, rent amount for the year? That is from June, because the tenancy started in the month of June to March 23. That is 55,000 into 10 months. So rent comes to 5,50,000 for the year. Right? Now the rate of TDS is 5%. So the TDS amount comes to 5%. What is the 5% of 5,50,000? Everyone, it comes to 27,500. So Mr. X is required to deduct TDS of rupees 27,500 from the rent of which month? March month, right? So he will deduct TDS of 27,500 from the rent of March month. Is that clear, everyone? Yes or no? Up till now, clear? Chalo, next is, would your answer change if Mr. X vacated the premises on 31st December 22? Yes. Why? Because up to 31st December, the rent comes to for 7 months. That is from June to December. So 55,000 into 7 months. It comes to 57,000 into 7 months into 5% rate of TDS. So it comes to 19,250. And this 19,250 is required to be deducted from the of rent of December, from the rent of December month. Also, what would be your answer if Mr. Y does not provide his PAN to Mr. X? If Mr. Y does not provide PAN to Mr. X, then the TDS is required to be deducted at the rate of 20%. So in first case, instead of 5%, TDS is required to be deducted 20%. So 55,000 into 10 months into 20%, right? Why 10 months? June to March. So it comes to 1,10,000. Now the last month of rent is 55,000. So here your TDS is restricted to 55,000 because excess amount owner will not give you back. In second case, 55,000 into 7 months into 20%. It comes to 77,000. Here also the TDS is restricted to 55,000. That is the rent of last month. Clear, everyone? Chalo. Next section is 194 IC, that is payment under specified agreement. Here, what is the meaning of specified agreement? Let us discuss that first. So, specified agreement is a joint development agreement which is covered under capital gain chapter. Under joint development agreement, and landowner and the builder is registered an agreement in which the builder will develop a building on the land given by the landowner, and for such land, the builder will give you consideration in cash on part of flat or anything in the building. That is the joint development agreement. So, in case of joint development agreement, the builder is responsible to deduct TDS on consideration paid to the landowner, and the rate of TDS is 10%. Here, the TDS is applicable only and only on cash. That is the monetary terms, monetary consideration provided by builder to landowner, and not the consideration in kind. That is, if the builder is providing flat to landowner, then the TDS on the value of flat is not applicable. But TDS is applicable only and only consideration in monetary terms. The rate of TDS is 10%. The time of deduction, again credit or payment, whichever is earlier. 194 IA is not applicable. See, we have discussed 194 IA, that is TDS on transfer of immovable property, but in case of specified agreement, specific section, that is 194 IC is given, so 194 IA is not applicable. So say for example, builder is giving 10 lakh rupees to landowner plus 2 flat. So TDS is applicable at the rate of 10% on 10 lakh rupees and not the on the value of flat. Clear everyone? Chalo, next is fees for professional or technical services. Applicability and rate of TDS. Every person other than individual or HUF, those individual and HUF whose turnover in the last year is less than 1 crore, and if they are in the profession, then their business receipt, their gross receipt is less than 50 lakh. Other than those individual, everyone is required to deduct TDS on professional fees or technical fees under section 194G. But TDS is required to be deducted on professional fees, technical fees, remuneration, or fees or commission by whatever name called, other than those on which TDS is deducted under 192 to director of company. Say, for example, sitting fees. On sitting fees, TDS is not deducted under section 192, but TDS is liable to deduct under 194G. Royalty or non-compete fees. The rate of TDS is 2% in case of fees for technical service and 10% in other cases. So 10% is applicable in case of professional service, director sitting fees, non-compete fees, everything. If you are in the business of call center, then on entire or on any kind of professional service, royalty, anything, the TDS rate is 2%. And in other business, the TDS rate is 2% in case of technical fees, and in other case, it is 10%. The time of deduction is payment or credit, whichever is earlier. The threshold limit is 30,000. But 30,000 separately is given fees for technical service, 30,000 separately for fees for professional service, and 30,000 separately for royalty and non-compete fees. Here, my dear friend, director sitting fee is not given. So there is no limit in case of director sitting fees. So if you are paying 15,000 director sitting fee, then also you are required to deduct TDS, because the 30,000 threshold is given for fees for professional service, 30,000 for technical service, 30,000 for royalty, and 30,000 for non-compete fees. Say, for example, you are paying 25,000 professional fees to Mr. X and 22,000 professional fees to Mr. 22,000 technical fees to Mr. X. So you are paying the total amount you are paid to Mr. X is more than 30. But the professional fees is less than 30,000 and the technical fees is less than 30,000. You are not required to deduct TDS on that amount. No, IA is not applicable, Sri Lakshmi. Mohammed, here those individual and HUF whose turnover in last year is more than 1 crore and the professional fees is more than 50 lakh, then they are required to deduct TDS under 194G. Non-compete fees means you are not, for example, if in one area there is an industry of Pepsi and Coca-Cola want to start their plant in the same area, then what happened? The Pepsi will pay certain consideration to Coca-Cola that you are not doing business in, say for example, in 5 kilometers from our factory. Okay, so that is called as non-compete fees. Mohammed, clear? So the summary is given. Mohammed, it is mentioned here that here in non-applicability of section 194J, here it is given that individual and HUF whose turnover in last year is more than 1 crore, then TDS is required to be deducted under 194G. So it is given in the provision. No, you have to check separate limit, Priyanka. Otherwise, if you are combining the limit, then you will get confused. So see here, in case of director, there is no limit is given. So let us discuss illustration number 9. XYZ Limited, Mohammed, clear? It is provided in the provision, but later in later part. Mr. XYZ Limited make a payment of 28,000 to Ganesh on 2nd August 22. Here the payer is XYZ Limited. 194J is applicable. Towards fees for professional service and another payment of 25,000 to him on the same date towards fees for technical service. Discuss whether TDS provision under 194J are attracted. No. Why? Because fees for professional service is less than 30,000 and fees for technical service is also less than 30,000. In aggregate, they are more than 30,000, but separate limit of 30,000 is given for professional service and separate limit of 30,000 is given for technical service. Here the provision is given if you are as an individual. If you are an individual and your turnover in last year is more than 1 crore, then TDS is required to be deducted under section 194G. And if you are obtaining this professional service for personal purpose, then TDS is not required to be deducted. Now, meaning of professional service, you have already learned in section 44AA in PGBP chapter. Just quickly go through. The professional service includes the service of legal, medical, engineer, architecture, profession of accountancy, technical consultancy, interior designer. Other notified service is authorized representative, film artist, company secretary, information technology. Other notified service also includes sports person, any sports, umpire and referee, coaches and trainee, team physician and physiotherapist, event manager, commentator, anchor, and sport columnist. They all are treated as profession. So if you are paying any fees to them, then you are required to deduct TDS under section 194G. The definition of this section is exhaustively. Okay. So if the any service is given which is not covered under 44AA or above notified services, then 194J is not applicable. For example, profession of teaching. Here the teaching is advanced text is pending, so we will discuss advanced text later. Here the teaching profession is not given, painters are not given. So if you are paying to painters or any teachers for obtaining the services, then TDS is not required to be deducted. Technical service means managerial service, technical consultancy, or any other personal service. Central Board of Direct Tax, CBDT. The, it is expressly provided the term fees for technical service will not include the following type of consideration. That is consideration for construction, assembly, mining like project, and consideration which is chargeable under the head salary. If you are a CA and you are working with MNC, then you are employee of that MNC. So TDS is deducted under section 192, okay, and not under 194J. But if you are practicing CA, then if you are providing any professional service to any company, then TDS is required to be deducted under section 194G. TPA, that is third party agreement. TPA liable to deduct TDS under section 194J on payment to hospital on behalf of insurance company. If there is a cashless insurance system, then on your behalf, the insurance company will pay bill to the hospitals. Okay. So for that, that is a third party administration who are making payment on behalf of insurance company to the hospitals. In that case, the TPAs are required to deduct TDS on the payment made to hospitals. Here again, the 30,000 limit is applicable. Clear? Anyone have any doubt up till now? Next is consideration for use or right to use of computer software is royalty within the meaning of section 9. Section 9 provides that any income payable by way of royalty in respect of any right, property, or information is deemed to accrue or arise in India. The term royalty, they have updated the definition of royalty under section 9(1) means consideration for transfer of all or any right in respect of certain rights, property, or information. So if you are using any software, so you have to obtain right to use that software. And for that, you require to make certain payments, right? So in that case, TDS is required to be deducted because it is covered under section 194J as royalty. The consideration for use or right to use of computer software would be royalty. So if you are paying license fee to use certain software, then you are required to deduct TDS under section 194J because the use of computer software is covered under the definition of royalty as per section 9. This explanation clarifies that transfer of all or any right in respect of any right, property, or information includes and has always included transfer of all or any right for use or right to use computer software, including granting of license. Certain software you are required to purchase, and certain software you obtain license. Okay. Consequently, the provision of tax deduction at source under 194J would be attracted in consideration for use or right to use computer software, since the same is covered under the definition of royalty. If person is No, in that case, the individual is not required to deduct TDS. The central government, by notification dated 13/6/22, exempted certain software payment from applicability of tax deduction under 194G. There are certain software on which you are not required to deduct TDS. Accordingly, where payment is made by transferee for acquisition of software from resident transferor, the provision of section 194J would not be attracted if the software is acquired in a subsequent transfer without any modification by the transferor. That means the transferor directly gives the software to you, that is ready to use software without any modification done by the transferor as per the requirement of transferring. Tax has been deducted under section 194J on payment for any previous transfer of such transfer. So on first transaction, TDS under 194J is already deducted. Then in subsequent transfer, the TDS is not required to be deducted. And here the transferee, that is the purchaser of software, is required to obtain declaration from transferor that the TDS is already deducted on earlier transaction. Therefore, again the TDS is not required to be deducted, and the PAN of transferor is required to be obtained by the transferee. Clear, everyone? If you have any doubt under section 194J, then let me know. After that, we'll discuss section 194K. If you are purchasing a software on which the TDS is already deducted on earlier transaction, then again the TDS is not required to be deducted under section 194G. Say for example, there is one ERP software there, okay? So on that, the developer, the agency is already deducted TDS, okay? The agency is already deducted TDS. Then suppose if XYZ Limited purchase the same software, then on the same the TDS is not required to be deducted again. Why? Because the agency is not modified the software and it is directly installed in the system of a company as it is purchased. '26 we will discuss later. Yes, Mohammed. If anyone has deducted your TDS, then the same is reflected in your 26 AS. So let us discuss section 194K, that is income in respect of units. Here the unit of mutual fund, unit from administrator of specified undertaking, and unit from specified company is covered. So if you are receive any income, say for example, if you are receiving dividend from shares, then TDS is required to be deducted under section 194. Yes. But if you are receiving dividend on mutual fund, then the mutual fund will deduct TDS on such dividend under section 194K, because under 194 is specifically given, because 194 is specifically given for shares. Okay. Here the rate of TDS is 10%. On dividend on mutual fund, the mutual fund will deduct TDS at the rate of 10%. This is notified by the government. Here the time of deduction is credit or payment, whichever is earlier. Credit means credit in the books of account. I have already explained the same in last lecture. If you are crediting the amount in the books of account by way of any name, that is by way of suspense account, payable account, whatever, it means credit in the books of account. Okay, so the deduction is required to be made on credit or payment, whichever is earlier. Yes, Anand. Non-applicability of section 194K. So here the threshold limit is 5,000. If a mutual fund company will pay the dividend to you, the amount is less than 5,000. Okay, say for example, the amount is 3,000, then TDS is not required to be deducted. Or the income is of the nature of capital gain. Say for example, if you sold your mutual funds, okay, then in that case, capital gain will arise. Say for example, the sale price is 5 lakh rupees and the purchase price is 1 lakh rupees. Then 4 lakh is my capital gain. So on capital gain, TDS is not required to be deducted under section 194K. So non-applicability is threshold limit 5,000. If the amount paid by mutual fund to you is less than 5,000, then TDS is not required to be deducted. Or if the income is in the nature of capital gain, that is the amount received on sale of mutual fund, then the TDS under section 194K is not applicable. Okay, chalo. Next section. Section 194LA. That is payment of compensation on acquisition of certain immovable properties. We have discussed section 194IA, that is TDS on transfer of immovable property. Non-applicability of section 194IA mentioned that on TDS on compensation on compulsory acquisition of immovable property, 194IA is not applicable. Why? Because specific section, that is 194LA, is given. So if a government compulsorily acquire your property, for example, for construction of bridge, the government is compulsorily acquired your property. Then in that case, the government will pay consideration to you, right? So on that consideration, the government is required to be deducted TDS under section 194LA. So 194LA provides for deduction of tax at source by person responsible for paying to resident. The pay should be resident. Any sum in the nature of compensation or enhanced compensation, consideration or enhanced consideration. Enhanced compensation, the meaning everyone knows, yes or no? Additional compensation. On account of compulsory acquisition under any law for the time being in force of any immovable property other than agricultural. Agricultural land for the purpose of this section means any land situated in India, including urban agricultural land. Okay, so here under 194IA we have discussed that the only rural agricultural land is covered, right? But here rural as well as urban agricultural land both are covered. So if your urban agricultural land is compulsorily acquired, then also the TDS is not applicable. Why? Because you are specifically given that other than agricultural land. The rate of TDS is 10%. The time of deduction is at the time of payment. Here the TDS is required to be deducted. The threshold limit is 2,50,000. The threshold limit is 2,50,000. So if the consideration paid by government on compulsory acquisition during a financial year is less than 2,50,000, then TDS is not required to be deducted. If it is more than 2,50,000, then TDS is required to be deducted. Clear, everyone? Up till now, everyone clear? Yes or no? Next section is 194M. Compulsory acquisition means, say for example, I have explained that the government for construction of bridge, your land is compulsorily acquired by government because they want to use that location for the construction of bridge. For example, for construction of metro, okay, government want to use your land because it is in the way of metro. So government compulsorily acquired your land. Chalo. Section 194C is for contract. Section 194J is for professional services. Or technical service. And section 194H is for commission or brokerage. In all three sections, we studied that this section is not applicable to those individuals, NHUF, Alok, the compulsory acquisition is covered under capital gain and it is taxable as capital gain. And if the TDS is deducted, you will claim the credit of TDS. To those individual NHUF whose turnover in last financial year, that is immediately preceding the financial year, is less than 1 crore, or professional receipt is less than 50 lakh. Then they are not required to deduct TDS on any contract given by them, or any professional service they obtain, or any commission or brokerage they are to pay. Right? Everyone clear? This 194C, 194J and 194H is not applicable to those individual NHUF whose turnover in last financial year is less than 1 crore, and if they are profession, then the gross receipt is less than 50 lakh rupees. Everyone clear with this? Yes or no? Then 194C, 194J and 194H is not applicable. So in that case, if they are obtaining any professional service or enter into any contract or paying any commission or brokerage, they are required to deduct TDS under section 194M if the value of such transaction is more than 50 lakh during the year. is more than 50 lakh during the year. The 194M provides for deduction of tax at source at 5% by an individual or HUF responsible for paying any sum during the financial year to any resident. So here the payee should be resident. For carrying out any work, including supply of labor, for carrying out any work in pursuance of contract. Commission. Not being commission referred to in section 194D. 194D is for insurance commission or brokerage or by way of professional services. This explanation is given here. It may be noted that only individuals NHUF other than those who are required to deduct income tax as per the provision of section 194C, H and J. Yani, if the payee is non-resident, then section 195 is applicable and 195 is not in your syllabus. So if as an individual, say for example, Mr. X is having turnover more than 1 crore in last year, that is in previous year 21-22. Then in current previous year, that is 22-23, he is required to deduct TDS under section 194C. So he is not required to deduct TDS under 194N. Say for example, Mr. X is having turnover of less than 80 lakh rupees in previous year 21-22. Then in previous year 22-23, he is required to deduct TDS under section 194M if all the condition of section 194M is fulfilled and not under section 194C. Are required to deduct tax in respect of above sum payable during the financial year to resident. The time of deduction is credit or payment, whichever is earlier. The rate of TDS is 5% and the threshold limit is 50 lakh. The threshold limit is 50 lakh. So, say for example, I like Mr. X, turnover in previous year 21-22 is 80 lakh. Receive professional service of rupees 52 lakh in previous year 20-23. Discuss the TDS implications. So here, my dear friend, Mr. X is not required to deduct TDS under section 194G. Why? Because last year his turnover is less than 1 crore. So he is required to deduct TDS under section 194N if the consideration is more than, the value of service is more than 50 lakh. Here the value of service is 52 lakh. So Mr. X is required to deduct TDS on 52 lakh at the rate of 5%. Say for example, instead of 52 lakh, it is 42 lakh. Instead of 52 lakh, it is 42 lakh. Then Mr. X is not required to deduct TDS under section 194M. Why? Because the value of service during a financial year is less than 50 lakh. That is the threshold limit. Okay. The TDS is, say for example, it is 52 lakh. Then 52 lakh into 5%. See, Mohammed, the turnover limit is given to check whether 194J is applicable or not. It is not the transaction, it is the turnover of last financial year. In second case, 194M is also not applicable because the value of service is less than 50 lakh. It is less than the monetary limit given under the section. Clear, Mohammed? Yes or no? Non-applicability, 52 lakh पे 5%. 52 lakh पे 5%. The rate of TDS is 5%. It is not mentioned that you are required to deduct TDS exceeding the value of 50 lakh. No. If the TDS is applicable, then TDS is required to be deducted on entire amount. 50 lakh पे 10% नहीं करना है, my dear friend. Yes, yes, yes. 194C, H and J not applied. You do that less turnover, then 194M apply. Mohammed, if 194J is applicable, then 194M is not applicable. Let us discuss the non-applicability of TDS under section 194M. See here it is given that if as an individual and HUF, if you are required to deduct TDS under section 194C, that is individual or HUF whose total sale, gross receipt or turnover from business or profession carried on by him exceed 1 crore in case of business and 50 lakh in case of profession during immediately preceding financial year, and such amount is not exclusively credited or paid for personal purpose of such individual or HUF, then 194C is applicable. Again, if you are paying any commission, then 194H is applicable. Then 194H is applicable if as an individual or HUF, your turnover, if you are doing a business, then your turnover in last financial year is more than 1 crore. And if you are in profession, then your gross receipt in last financial year is more than 50 lakh. Then 194H is applicable. Exceeds 1 crore in case of business and 50 lakh in case of profession. Same under section 194J, if as an individual, your turnover in the last year is more than 1 crore, and if you are in profession, then your gross receipt is more than 50 lakh immediately preceding the financial year, then 194J is applicable and 194M is not applicable. Everyone clear with this? Yes or no? Mohammad, Dhyanesh, Priyanka, Kavita, Alok, Anand, clear? Yes or no? Yes, Mohammed. No requirement to obtain 10. If it is for personal purpose, then we'll discuss the illustration in detail. Illustration number 10. Here also the 10 is not required. You can intimate your transaction via pen. Time and mode of payment of tax deducted at source under section 194IA, IB and 194M to the credit of central government. See, in all this question, yes. Say for example, under section 194IA, IB and 194M, we have discussed that the 10 is not required. Yes, in that case, the 10 is not required. Okay. So in that case, you have to provide the details to the government by furnishing the Chalan cum statement. So Such sum below 1 crore. Anand. Below 1 crore. Everything is same. In every section, it is mentioned that if the turnover is more than 1 crore in last year, then the TDS is required under respected section. Such sum deducted under 194 IA, IB, and see if you are deducted TDS under section 194 IA, IB, or M, then you have to pay such deposit. You have to deposit such TDS to the account of government, right? So you have to deposit such TDS to the central government within a period of 30 days. Within a period of 30 days from the end of month in which deduction is made. So say for example, if you are deducted TDS in the month of November, then you have to deposit TDS to the account of government up to 30th December. Okay, and shall be accompanied by a Chalan cum statement in form 26 QB for 194 IA, QC for IB, and QD for 194 M respectively. Chalan cum statement is the form in which you have to provide the details of the payee. Say, for example, you are deducted TDS of Mr. X, then in the Chalan cum statement, you have to provide the details of Mr. X, that is the full name, address, PAN of Mr. X, the section in which you deducted TDS, the amount on which the TDS is deducted, the amount of TDS. This all is given in the form. It is the form. You can deposit the TDS by electronic remittance, that is by way of check, or by online transfer, that is net banking. Now you have deposited the tax via Chalan cum statement to the government. Now you have to provide the form, that is the certificate that the TDS is deducted and deposited to the government, to the payee, within 15 days from the due date for furnishing the Chalan cum statement. Yani, say for example, you are deducted TDS in the month of November. So you are required to deposit the TDS by way of Chalan cum statement to government by 30th December. So from that, the 15 days up to 14 Jan, you have to give a TDS deduction certificate to the payee in form 16B for 194 IA, 16C for 194 IB, and 16D for 194 M. Okay, you can download the same online on the portal. So let us discuss the illustration number 10. Examine whether TDS provision would be attracted in the following cases, and if so, under which section. Also specify the rate of TDS applicable in each case. Assume that all payments are made to resident, that is the payee is resident. Chalo, first case. If Mr. Ganesh, an individual, is an online platform, carrying on retail business with turnover of 2.5 crore in previous year 21-22. Contract payment for the purpose is the nature of payment is contract payment for repair of residential house. Aggregate payment, this example 10, in financial year 20-23. So for contract payment for repair of residential house, he made payment of rupees 5 lakh, and his turnover in the last financial year, that is in last previous year, that is previous year 21-22, it is 2.5 crore. That is more than 1 crore. So is required to deduct TDS under section 194C and not 194M. But here the nature of payment is for repair of residential house, that is for personal purpose. And section 194C is not applicable if the contract is entered for personal purpose, right? So in this case, 194M is not applicable. Why? Because in last year his turnover is more than 1 crore. 194C is also not applicable. Why? Because the contract is made for personal purpose. Okay, so see here. No TDS under section 194C. TDS under section 194C is not attracted since the payment is made for personal purpose. TDS under section 194N is also not attracted as the aggregate of contract payment to the payee in previous year 22-23 does not exceed 50 lakh. Payment of commission to Mr. Villas for business purpose 80,000. See, here his turnover in the last year is more than 1 crore. So section 194H is applicable. And TDS is required to be deducted under section 194H. Why? Under section 194H, the threshold limit given is 15,000. Here the commission payment is more than 15,000. It is 80,000. So here the section 194H is applicable and TDS is required to be deducted under section 194H. See. Yes, 194H, since the payment exceeds 15,000 and Mr. Ganesh turnover exceeds 1 crore in previous year 21-22. 194M is applicable in case of personal service also, but my dear friend, here the value of service is 5 lakh, which is less than 50 lakh. Mr. Rajesh, a wholesale trader whose turnover was 95 lakh in previous year 21-22. So in previous year 21-22, the turnover of Mr. Rajesh is less than 1 crore. So section 194J, 194C, 194H is not applicable. Okay. So let us see that which kind of payment he has made. Contract payment for reconstruction of residential house made during the March to March 23. 20 lakh in January 23, 15 lakh in Feb 23 and 20 lakh in March 23. Total payment made is 55 lakh. See, here 194J, 194C and 194H is not applicable. Why? Because in previous year, that is 21-22, turnover of Mr. Rajesh is less than 1 crore. Now let us discuss whether 194M is applicable or not. So here the consideration paid is more than 55 lakhs. So TDS is required to be deducted under section 194M. Okay. Under 194M, it is not given that if the service is obtained for personal purpose, then the section is not applicable. So even if it is for personal purpose, 194M is applicable. Yes, under TDS is deducted. Yes, under which section? 194M. Since the payment of aggregate of payment, that is 55 lakh, exceeds 50 lakh. Since his turnover does not exceed 1 crore in previous year 21-22, TDS provision under section 194C are not attracted in respect of payment made in previous year 22-23. Mr. Satish, a salaried individual, that means he does not have any turnover. So again, 194J, 194C and 194H not applicable. Payment of brokerage for buying a residential house in March 23 and the value of brokerage is 51 lakh. Whether 194M is applicable, yes or no? Yes, 194M is applicable. Why? Because the brokerage value is more than 50 lakh. Yes, 194M, since the payment of 51 lakh made in March 23, then not applicable, Mohammed. Exceed the threshold of 50 lakhs. Since Mr. Satish is a salaried individual, the provision of Section 194H are not applicable in this case. Chalo, last point. Mr. Dheeraj, a pensioner. He is a pensioner, so 194, there is no turnover. So 194J, 194C, and 194H is not applicable. The nature of payment is contract payment made during October-November 22 for reconstruction of residential house, 48 lakh. Contract payment is there? Yes. So 194C is not applicable. Why? Because he is a pensioner and he does not have any business income in the last year. Now, 194M is applicable or not? No. 194M is also not applicable. Why? Because the value of contract is less than 50 lakh. Because the value of contract is less than 50 lakh. TDS provision under section 194C are not attracted. Since Mr. Dheeraj is a pensioner, TDS provision under section 194M are also not applicable in this case, since the payment of 48 lakh does not exceed the threshold of 50 lakh. Okay, clear everyone? Just go through up till now. I'll give you 2 minutes. After that, we will discuss section 194N, that is TDS on cash withdrawal. If you are any doubt, then let me know. Yes, Alok, 194C is not applicable because he is a pensioner. Up till now, if you have any doubt, just let me know. Yes, yes. In case of salaried individual also, he does not have any business in the last year. So the TDS is under 194C, J, and H is not applicable. Clear, Alok? Yes, Mohammed. Chalo, next section, that is TDS on cash withdrawal, section 194N. If you are withdrawing any cash from your bank account, and if the withdrawal during the financial year, that is during the previous year, is more than 1 crore, then the bank is required to deduct tax on such withdrawal at the rate of 2%. Section 194N provides that every person being, here the payer is banking company, cooperative society, engaged in the business of banking, or post office, who is responsible for paying any sum, being the amount or aggregate amount as the case may be in cash, exceeding 1 crore during the previous year, to any person from one or more account maintained by such recipient person with it. Say for example, in State Bank of India, if you are having a two account, then in aggregate, if you are withdrawing 1 crore from your both of account in aggregate, then the bank is required to deduct TDS on such withdrawal at the rate of 2%. The time of deduction here is at the time of payment. The time of deduction is at the time of payment. Modification in rate of TDS and threshold limit. See, my dear friend, here the TDS is required to be deducted on the amount exceeding 1 crore. Huh? So, say for example, if you are withdrawing 95 lakh from bank, then no TDS is required to be deducted because it is less than 1 crore. If you are withdrawing 1 crore 10 lakh, then TDS is required to be deducted on 10 lakh. That is the sum exceeding 1 crore. Up till now, we have discussed that if the amount is more than threshold, then the TDS is required to be deducted on entire amount. But here, under section 194N, the TDS is required to be deducted on amount exceeding 1 crore. So here, the TDS is required to be deducted on 10 lakh only at the rate of 2%. Clear? Everyone clear with this? The withdrawal is in the name of account holder. That's it. Now the modification in rate of TDS and threshold limit of withdrawal for recipient who has not furnished the return of income for last 3 years. Bank have all the records, Mohammed. Bank is required to deduct TDS and bank have all the records that a person is withdrawing more than 1 crore or not. Say for example, as a recipient, you are not furnished the return of income for last 3 years. Yes, during previous year. Say for example, you are withdrawing in previous year 22-23 amount of rupees 1 crore 20 lakh. Okay. So in last 3 previous year, that is previous year 21-22, you have not filed your return of income for this 3 years, that is immediately preceding the previous year. So if you are withdrawing in previous year 22-23 and for last 3 years, that is previous year 21-22, 2021 and 19-20, you have not filed your return of income and the due date for filing the return of income is expired. The due date for filing return of income has expired. Then in that case, the TDS rate is revised, that is 2% of sum, whether the amount or aggregate of amount, as the case may be, being paid in cash is greater than 20 lakh but less than or equal to 1 crore. So more than 20 lakh but less than 1 crore. So here it comes to 80 lakh rupees, right? So on 80 lakh, bank will deduct TDS at the rate of 2%. The limit of 1 crore is reduced to 20 lakh if the assessee has not filed the last 3 years return of income. And 5% of sum where the amount or aggregate of amount, as the case may be, being paid in cash is more than 1 crore. It is given in the question, Mohammed. The amount is more than 1 crore or not. So above 1 crore, it is 20 lakh. So 5% on 20 lakh. TDS is required to be deducted. In question, they will provide you that the Mr. X is withdraw 1 crore 20 lakh from the bank. So you have to apply your knowledge that it is more than 1 crore, then TDS is applicable. Now you have to check whether Mr. X has filed his return of income for last 3 years. If yes, then you are required to deduct TDS on amount exceeding 1 crore. If no, then you are required to deduct TDS on amount exceeding 20 lakh, but 20 lakh to 1 crore 2% and more than 1 crore 5%. Everyone clear with this? This 3 years, everyone clear? Yes or no? Everyone clear with this 3 years? Yes or no? No TDS. See, you are withdrawing 1 crore 20 lakh, then the TDS on 20 lakh is deducted at the time of payment. So they will pay you after deducting TDS. Now the government has power to specify with the consultation of RBI by modification. Here the marginal tax is not came, my dear friend. Anand, you have to simply remember that if you are withdrawing more than 1 crore, then the bank will deduct TDS on the amount more exceeding 1 crore at the rate of 2%. The recipient in whose case this provision shall not apply or apply at reduced rate subject to satisfaction of conditions specified in such modification. So the non-applicability of TDS under section 194N. So liability to deduct tax at source under section 194N shall not be applicable to any payment made to government. So if government is withdrawing any amount, then the TDS is not required to be deducted. $50 lakh. Dhyanesh, it is deducted on 50 lakh, that is exceeding the amount, exceeding 20 lakh. Vedant, 80 lakhs comes to 1 crore minus 20 lakh. Because the 2% is required to be deducted on amount exceeding 20 lakhs. Clear, Vedant? Yes or no? Vedant, clear? Okay, chalo. So if the withdrawal is made by government, then the TDS is not required to be deducted. If one banking company is withdrawing amount from another bank, then also the TDS is not required to be deducted. Same cooperative society engaged in the business of banking or post office. Any business correspondence of banking company or cooperative society engaged in carrying on the business of banking in accordance with the RBI guideline. Any white label ATM operator of banking company. See, every day in ATM, the ATM white label ATM operator will fill the ATM machine. Okay, so for that they required cash. So they have to withdraw cash. Okay, from bank. Then in that case, the 194N is not applicable. But there are certain criteria that they have to maintain separate account for the withdrawal of the amount. The central government may specify with consultation of RBI by modification the recipient in whose case Section 194N shall not apply or apply at reduced rate subject to satisfaction of conditions specified in such notification. Accordingly, they have specified that the cash replenishment agency and franchisee agent of white label automated teller machine operator. Because if the return is not filed, Vedant, then the TDS is required to be deducted on amount exceeding 20 lakh. Up to 20 lakh, no TDS is required to be deducted. That's why. So here, white label automated tailor machine operator have to maintain a separate account from which the withdrawal is made, and the only purpose for withdrawal is the replenishing the ATM machine. And they have to furnish a certificate every month to the bank certifying that the bank account they separately maintain, and the franchisee agent who have examined and the amount being withdrawn from their bank account has been reconciled with the amount of cash deposited in ATM. So they have to maintain they have to provide the reconciliation of that amount withdrawn from the specified bank account and the amount deposited in the ATM machine. Mohammed, please read all the sections carefully. Here it is given that the TDS is required to be deducted on amount exceeding 1 crore. In other section, the threshold limit is given that the TDS is not required to be deducted, say for example, in professional service, if the bill amount is less than 30,000. Nowhere is given that if the bill amount is more than 30, then TDS is required to be deducted on amount exceeding 30,000. Okay. Cash replenishment agency is the agency that deposit that fill the machine of ATM. Clear, Mohammed? Alok, you have to study regularly. Then also you will be able to remember all the questions. To track the cash transactions, Uday. Commission agent or trader operating under Agricultural Produce Market Committee and registered under any law relating to agricultural produce market. See, APMC need to make the payment to various farmers. Okay, so in that case also they need more cash. But in that case, they have to provide their PAN and details that they are certified APMC and they have made the payment to the farmers. Who has intimated to the banking company or cooperative society or post office his account number through which he wished to withdraw cash in excess of 1 crore in previous year along with his PAN and the detail of previous year and has certified to bank or cooperative society or post office that the withdrawal of cash from account in excess of 1 crore during the previous year is for the purpose of making payments to the farmers on account of purchase of agricultural produce. And the banking company or cooperative society or post office has ensured that the PAN coded is correct and commission agent or trader is registered with APMC for this purpose. Again, 194N is not applicable to authorized dealer and its franchisee agent and some agent. See, for exemption under 194M, you need to obtain certificate. Full-fledged money changer licensed by RBI and its franchisee agent. See, if any foreigner is traveling in India, then they need Indian currency. For that, they have to convert their foreign currency. Yes, Mohammed. They have to convert their foreign currency into Indian rupees. So for that purpose, the full-fledged money changers that licensed by the RBI is exempt from TDS under section 194N. But for that purpose, they have to maintain a separate bank account in which withdrawal is made only for the purpose of purchase of foreign currency from foreign tourists. You have to purchase foreign currency from foreign tourists and give them the Indian currency. Yes, Vedant. Or non-resident visiting India or from resident Indians or on their return to India in cash as per the direction or guideline given by the RBI. Disbursement of inward remittance to recipient beneficiary in India in cash under money transfer service scheme. See, 194N exemption is only available if the certificate is furnished to the bank by the authorized dealer or franchisee or sub-agent or the full-fledged money change. Okay. कविता 194N तब एप्लीकेबल होगा जब आप कैश विड्रॉ करते हो और कैश विड्रॉल मोर 1 करोड़ से ज्यादा हो, तो जितनी 1 करोड़ की ऊपर की वैल्यू है उसके ऊपर 2% TDS करना है. And if you are not filing your return for past 3 years, then 1 करोड़ वाली limit is reduced to 20 lakh. Okay, so up to 20 lakh you are withdrawing, then the no TDS is required to be deducted. 20 lakh to 1 crore, 2% is the rate of TDS, and exceeding 1 crore, the rate of TDS is 5%. Clear? So let us take a break of 5 minutes. After that, we will discuss next section, that is section 194O. Section 194O. TDS on certain payment by e-commerce operator to e-commerce participants. Now here what happened, my dear friends. I'll give you an example of Flipkart. Okay. The mobile. Of Red. Okay. So the Redmi sold his mobile online through Flipkart. So here the Flipkart is e-commerce operator and Redmi is e-commerce participant. Okay. So say for example, Mr. X purchased a mobile of Redmi from Flipkart worth rupees 25,000. So Mr. X will pay 25,000 to Flipkart and Flipkart will pay same to Redmi. Okay. So here the e-commerce operator is the online platform on which one can sell his goods or provide the services. Another example is Zomato. Okay. So 194MO provides that where sale of goods or provision of service of an e-commerce participant is facilitated by e-commerce operator through its digital or electronic facility or platform, such e-commerce operator is liable to deduct tax at source at 1% of gross amount of such sale or service or both. So here the Flipkart is required to deduct TDS on the payment made to Redmi at the rate of 1%. So here the payer is e-commerce operator and the payee is e-commerce participants. That is, in our case, the payer is Flipkart, that is e-commerce operator, and the payee is Redmi, that is e-commerce participant. Time of deduction here again, credit or payment, whichever is earlier. Credit or payment, whichever is earlier. Deemed credit. If suppose a purchaser of goods directly pay the amount to the e-commerce participant, then also it is deemed that the amount is credited by the e-commerce operator. And accordingly, on such amount also TDS is required to be deducted. Non-applicability of TDS under section 194O. If the gross value of sale of goods or services or both during the previous year of e-commerce recipient is less than 5 lakh, Say for example, the total sale made by Redmi through Flipkart is 4,50,000. So it is less than 5 lakh. Yes, then the TDS is not required to be deducted. If the value is more than 5 lakh, then the TDS is required to be deducted on an entire amount. See here, they have not written that the TDS is required to be deducted on amount exceeding 5 lakh. Okay. So no TDS is required to be deducted when the gross amount of sale of goods or service or both of e-commerce participant during the previous year is less than 5 lakh rupees. E-commerce participant has to furnish his PAN or Aadhaar to e-commerce operator. Non-applicability of TDS under any other section. If the e-commerce operator is required to deduct TDS under section 194O, then he is not required to deduct TDS under any other provision of this chapter, that is under any other sections. Okay, if 194O is applicable, then other sections are not applicable. Power of CBDT to issue guideline. To remove the difficulty, CBDT, that is Central Board of Direct Tax, may issue guideline for the applications of this section. Applicability on payment gateway. Here there is one circular. I'll explain you the same. Say for example, again our same example. Flipkart, Redmi, Mr. X. Mr. X purchased a mobile of Redmi on Flipkart and he made payment through Google Pay to Flipkart. Okay, so here the payment gateway my dear friend, here that provision is not applicable 3 previous order at all. That we will discuss later. So if the Google Pay is a payment gateway, Google Pay is also e-commerce operator. Why? Because the Flipkart receive payment via Google Pay. That is the online platform. So now in this case, who will deduct TDS? Because both Flipkart and Google Pay both are e-commerce operator. So if Google Pay will deduct TDS and on the same amount Flipkart is also deduct TDS, then there is a double deduction. Okay, so for removing this difficulty, the government, the CBDT issue a circular that the payment gateway, that is the Google Pay, is not required to deduct TDS on the payment made to Flipkart. You have to provide your PAN. Otherwise, credit is not available. Simple. See, in exercise of power to issue guidelines, CBDT has, with the approval of central government, by circular number 17 by 2020 dated 29 November 2020, issue the guideline for removing certain difficulties. One of such difficulty is applicability of 194O twice in case where e-commerce transaction the payment are generally facilitated by payment gateway. So here double taxation, double deduction arise. So for that, the CBDT has issued a circular on one such difficult. Consequently, it is possible that there may be applicability of section 194O twice, that is once on the main e-commerce operator who is facilitating the sale of goods or provision of service or both, that is Flipkart, and once on payment gateway, that is Google Pay, who also happen to qualify as e-commerce operator for facilitating service. To illustrate, a buyer buy a goods worth rupees 1 lakh on e-commerce website, that is XYZ. In our case, it is Flipkart. He make a payment of 1 lakh through digital platform. That is, the payment of 1 lakh is done by Google Pay. That is ABC. On this fact, liability to deduct tax under section 194O may fall on both XYZ and ABC. That is, in our case, Flipkart and Google Pay. In order to remove this difficulty, it is provided that the payment gateway will not be required to deduct tax under section 194O on a transaction. That is, the Google Pay is not required to deduct tax under section 194O if the tax has been deducted by e-commerce operator under section 194O on the same transaction. But for that purpose, so in this case, XYZ has to deduct tax under section 194O on 1 lakh, that is in our case Flipkart, is required to deduct TDS under 194O, and Google Pay is not required to deduct TDS under section 194O. But for proper implementation, the Google Pay should take an undertaking from from Flipkart that the Flipkart will deduct TDS on that transaction. Clear, everyone? Yes or no? Mohammed, here the transaction is for only one transaction is given. During the year, there are so many transactions. So for explanation purpose, here only one transaction is given. Now, what is e-commerce? So the supply of goods or service or both, including digital product over digital or electronic network. E-commerce operator means a person who owns, operate or manage digital or electronic facility or platform for electronic commerce. E-commerce participant means a person resident in India selling goods or providing service or both, including product through digital or electronic facility or platform. Services includes fees for technical service, professional service, everything as we have discussed in under section 194G. Everyone clear with section 194O? Yes or no? Let us discuss next section, that is deduction of tax by specified bank in case of specified senior citizen. Section 194B. They will provide the certificate to us that they have deducted so much amount of TDS, and the same is reflected in our form 26AS. So by way of form 26AS, we are also able to view that how much amount of TDS is deducted by e-commerce operator. Clear, Uday? That we will discuss later, that they have to provide a certificate to us. So, deduction of tax by specified bank in case of specified senior citizen. It is the new section 194P. Section 19, see here, the section itself says that it is the payer is specified bank and the payee is specified senior citizen. Specified senior citizen we will discuss, just wait. Okay, so if you are non-senior citizen, this section is not applicable. It is only and only for specified senior citizen. The definition of senior citizen we will discuss. Section 194P required deduction of tax at source on the basis of rate in force. Here the rate is rate in force. By a specified company. Yes. Being a banking company as notified by central government on the total amount of specified on the total income of specified senior citizen for the relevant assessment year computed after giving effect to deduction allowed under chapter 6A and rebate allowable under section 87A. So bank have to compute the total income of specified senior citizen, that is net taxable income, after deduction of chapter 6A and rebate under section 87A. Okay, they have to calculate their total income, and on total income they have to calculate tax by applying the rate in force, and on that rate they have to deduct TDS. Accordingly, CBDT has filed notification number 98 by 2021 dated 2nd September 21, notified specific bank to name a banking company which is a scheduled bank. So specified bank means a scheduled bank and has been appointed as an agent of RBI under section 45 of RBI Act 1934. Exemption from filing return of income. See, in this case, the specified senior citizen whose TDS is deducted under section 194P, they are not required to file their return of income. They have exemption from filing their return of income. Chalo. Specified bank means banking company as notified by central government, that is scheduled bank. Specified senior citizen means an individual only. Being a resident in India, he should be resident in India. If he is non-resident, this section is not applicable. Who is of the age of 75 years or more. Here the age is given as 75 years. So if your age is less than 75 years, then you are not covered under the specified senior citizen for section 194P. See, my dear friend, you all have to ignore the super senior citizen, the senior citizen. Here the specific definition is given. You have to focus on that definition only. So if an individual being a resident in India who is of the age of 75 years or more at any time during the previous year, both are covered. Is having pension income, is having a pension income. Also, he should have no other income. He should have no other income except interest income received or receivable from any account maintained by such individual in the same specified bank in which he is receiving his pension income, and has furnished a declaration to the specified bank containing such particular in such prescribed form and verified in the prescribed manner. Best example is Mr. X, aged 77 years, receiving a pension of rupees 2 lakh for the year in SBI, that is State Bank of India. Mr. X receiving pension of rupees 2 lakh in SBI. Now, for the benefit of 194P, his other income should be interest on FD or saving from State Bank of India only. So say for example, if he is earning an interest on FD from Bank of India, then in that case, this section is not applicable. Why? Because for this section, he should have interest income from the bank in which the pension is received. Okay. So condition is he is of the age of 75 years or more. He is having pension income. He is having other income, that is interest income from the same bank in which the pension is credited. Okay. And here you have to consider, as a bank, you have to consider the deduction allowable under Chapter 6A. So for that deduction, you have to obtain an evidence from the specified senior citizen for claiming deduction under Chapter 6A. Mohammed, the deduction is 50,000 is available for senior citizen under Section 80TTP. Let us discuss illustration 11. You will get better understanding of the section. Mr. Sharma, a resident Indian, aged 77 years, gets pension of 52,000 per month from UP state government. Mr. Sharma obviously is eligible, na? Chapter 6 covered 80TTP. Mr. Sharma, resident, aged 77 years. He is individual, resident in India, age is 75 years or more. He is having pension income. Okay, so he is eligible for ATP. Now, let us see his other income status. The same is credited to his saving account in SBI Lucknow branch. In addition, he get interest at 8% per annum on fixed deposit of rupees 20 lakh with the state bank. That means he is earning a fixed deposit interest in SBI only, in which the pension get credited. So what is the amount of interest? The fixed deposit is 20 lakh and the rate of interest is 8 lakh. So 20 lakh into 8%. How much interest income? 1,60,000 is FD interest. 2 lakh represent 5-year term deposit made by him on 1/4/22. So 5-year term deposit is eligible for deduction under section 80C. Yes, the deposit amount is 2 lakh, but 80C deduction is maximum available is 1,50,000. So 80C is 1,50,000. Interest on saving bank credited to his SBI saving account for previous year 22-23 is 9,500. Saving interest 9,500 from same bank. From the above fact, compute the total income and tax liability of Mr. Sharma for assessment year 23-24, assuming that he has not opted for section 115 BAC. So what is his total income? Chalo, and tax liability. Calculate the total income and tax liability. So in total income, there is a pension of 52,000 per month. So what is the amount of pension? It comes to 6,25,000. Pension is covered under salary. Okay. So the standard deduction of 50,000 is available. So net salary income, that is net taxable pension, is 5,74,000. 1,60,000 fixed deposit interest. We have already calculated the same. And 9,500 saving. So total interest income is 1,69,500. So gross total income is 7,43,500. Now the deduction is available. Yes or no? Yes. The 5-year term deposit he has made of rupees 2 lakh, but under 80C, the maximum deduction is available is 1,50,000 only. And under section 80 TTB on resident senior citizen, deduction of 50,000 is available on his interest on fixed deposit and saving account. So here the 50,000 deduction is available under section 80 TTB. So total deduction comes to 2 lakh rupees. Now the taxable income is 5,43,500. Now on 5,43,500, we have to calculate the tax liability. So up to 3 lakh, lakh. 3 lakh to 5 lakh, 5%, 10,000 rupees. Above 5 lakh, that is on 43,500, it is 20%. 87. So total tax liability comes to 18,700. Health and education cess is 4%. So total tax liability is 19,448, rounded off to 19,450. Okay, so first question is done. That is the tax liability. What would be the amount of tax deductible at source by SBI, assuming that the same is specified bank? Is Mr. Sharma required to file his return of income for AY 23-24 if tax is deductible at source has been fully deducted examined? See, Mr. Sharma fulfill all the criteria of specified individual. Now the SBI is specified bank. So SBI will deduct TDS as per the total tax liability calculated here, that is 19,450. And the SBI is remitted the same amount to the account of central government. So here the section 194B is provided. is applicable, and as per section 194P, the individual, that is the specified senior citizen is not required to file return of income. So in this case, the SBI being a specified bank is required to deduct tax at source under 194B. How much tax is required to be deducted? The total tax liability, that is 19,450. And the same, and remit the same to the central government. So already the tax liability which may arise on the income of Mr. Sharma is already deposited to the government. So now Mr. Sharma is not required to file return of income under section 139. Clear, everyone? Is Mr. Sharma required to file his return of income for assessment year 23-24 if fixed deposit of 20 lakh was with Canara Bank instead of SBI, other facts remaining the same? Yes. In that case, Mr. Sharma is required to file return of income. Why, my dear friends? Because for section 194P, you have pension income and you have interest income only and only from the bank in which your pension is credited. But in this case, the pension is credited in SBI account and the interest, the fixed deposit interest is received from Canara Bank. So both are separate banks. So in that case, 194P is not applicable and Mr. Sharma is required to file his return of income under section 139 within a due date. Okay. If the fixed deposit of 20 lakh is with the bank other than SBI, which is the bank where his pension is credited, then Mr. Sharma would not qualify as specified senior citizen. Mohammed, rebate is available when the net income is less than 5 lakh. Here the net income is more than 5 lakh. So rebate is not available. Mr. Sharma would have to file his return of income under section 139 since his total income without giving effect to deduction under chapter 6A exceeds basic exemption limit. Clear, everyone? So go through the provision up till now. If you have any doubt, then let me know. After that, we will discuss section 194Q. It is very important section, so be careful. And in between 194Q, please don't ask the question of earlier sections. I'll give you 2 minutes. Just ask me a question if you are having any doubt. Interest in aggregate along with the saving and fixed deposit TTB में 50,000 reduction is available. Okay, so again 9,500 is not available. In case of senior citizen, if 194P is applicable, no, Uday. If the pension is credited in Canara Bank and everything is in Canara Bank and Canara Bank is a specified bank, then 194P is applicable. If a senior citizen and 194P is applicable, then he is not required to file his return of income. Why? Because under 194, Kavita, we will discuss 139 in detail in filing of return of incomes chapter. If 194P is applicable, then the bank has to calculate the final income tax liability and deposit the same to the government. As earlier, we have calculated the 19,450 as tax liability. That is the on total income. Okay. 194N is for cash withdrawal. If you are withdrawing cash from bank more than 1 crore, then 5%, then 2% TDS is required to be deducted on amount exceeding 1 crore. And if you are not filing past 3 years return, if you are not filed past 3 years return, then the TDS is required to be deducted 2% on amount exceeding 20 lakh to 1 crore, and above 1 crore, it should be 5%. You have to remember that only. Yes, Mohammed, but first you have to read all the sections in detail and you have all the conceptual knowledge of all the sections. Clear? Shall we start with the new section, that is 194Q? Here, I'll explain two sections simultaneously, so be careful. That is 2061H, collection of TDS, and 194Q. No, the bank will deposit the 50,000 or even 1 lakh rupees tax deduct. They will deduct 1 lakh tax and deposit the same to the government. That's it. The purpose is to deposit the entire tax by bank to the government. And obviously, bank will deduct tax from your income only. $194Q is applicable on purchase of goods. And 2061H is applicable on sale of goods. Okay. So here, who is payer? Buyer. In case of TCS, the tax should be collected. The tax should be collected. In TCS, the full form is tax collected also. So you have to collect tax from buyer. Now, under 194Q, if you are a buyer and you are purchasing any goods from seller, any goods from seller, and the threshold limit is 50 lakhs. So if you are purchasing goods valued more than 50 lakh, then on amount exceeding rupees 50 lakh, you are required to deduct TDS at the rate of 0.1%. Say for example, I have purchased a goods from ABC Limited amounting to rupees 52 lakh. 52 lakh. मैंने कितने का goods purchase किया? The value of purchase of goods is 52 lakh. So 50 lakhs is ज़्यादा. That is the amount exceeding 50 lakh. कितना है? That is 2 lakh rupees. That is 2 lakh rupees. So on 2 lakh, I have to deduct TDS at the rate of 0.1%. The time of deduction is payment or credit, whichever is earlier. The time of deduction is payment or credit, whichever is earlier. Here again, the definition of buyer is given. This section is applicable to those buyers. This section is applicable to those buyers whose turnover during previous financial year, that is during immediately preceding previous year, यानी जिस साल का आप कैलकुलेट कर रहे हो उसके पहले वाले साल. So for example, if you are calculating TDS implications for previous year 20 to 23, Then in previous year 21-22, if your turnover is greater than 10 crore, if your turnover is greater than 10 crore, then only in current year, if you are purchasing any goods valued more than 50 lakh, then you are required to deduct TDS at the rate of 0.1% on amount exceeding 50 lakh. Clear? I'll give you an example. Be careful. After that, you will ask an answer question. There is XYZ Limited. Turnover in previous year is 21-22 is 20 crore. In previous year 22-23, they have purchased goods from ABC firm of rupees 52 lakh. Chalo, whether TDS under section 194Q is applicable or not. So what you have to check, buyer is XYZ Limited. In last year, that is in previous year 21-22, the turnover of XYZ Limited is more than 10 crore. Yes, it is 20 crore. Now in previous year 22-23, that is in current year, can XYZ Limited purchase a goods more than 50 lakh? Yes, the purchase value is 52 lakh. Then section 194Q is applicable. Now, the XYZ Limited is required to deduct TDS at the rate of 0.1% on 2 lakh. How come 2 lakh? 52 lakh minus 50 lakh, because 50 lakh is the threshold. Above 50 lakh, you have to deduct TDS. Okay, so on TDS 0.1%, 0.1% on 2 lakh, TDS is required to be deducted. Is that clear, everyone? Now, another example is, same example, the buyer is XYZ, turnover in last year is 20 crore. In current year, that is 22-23, purchase goods from ABC firm of rupees 48 lakh. Whether TDS under section 194Q is applicable, yes or no? Give your answer, everyone, quickly. Yes or no? Everyone, give your answer quickly. No TDS is applicable. Why? Because the turnover in last year is more than 10 crore, but the value of goods purchased during the current previous year is less than 50 lakh rupees. Another question is, XYZ Limited, turnover in previous year 21-22 is 9 crore. 50 lakh limit is aggregate for the year per seller wise. In previous year 21-22, the turnover is 9 crore. In previous year 22-23, XYZ purchased goods from ABC Limited of rupees 60 lakh. Whether TDS under section 194N is 194Q is applicable, yes or no? Everyone, quickly. No TDS is applicable. Why? Because the turnover in last year of Mr. XYZ Limited is less than 10 crore. Very good, everyone. I'm very proud of you. Everyone understand the provision very carefully. Very good, everyone. Okay. So bias perspective, that is 194Q. Now I'll explain the section 206 C1H. See, in TCS, seller has to collect tax from buyer. I am explaining both the provision. Be careful. 206 CH will come in later part, but I am explaining here only the same section. Okay. 206C 1H is applicable on sale of goods. Here the seller has to collect tax from buyer on sale of goods. Here seller has to collect tax from buyer from sale of goods. Now here the meaning of seller is same that we have discussed under section 194Q as the definition of buyer. The seller means whose turnover in last financial year is greater than 10 crore. Here we have discussed the purchase value. Here we have to consider the sale value. And in current year, sale done. See, here this 50 lakh is for party wise. Say for example, you are purchasing from ABC's 50 lakh, 52 lakh here. And from say for example, PQR you are purchasing for 10-20 lakh rupees. So in case of PQR, you are not required to deduct TDS. But in case of ABC, you are required to deduct TDS. Everyone clear with this? Now in current sale done to one party, sorry here, receipt from a party on sale of goods is more than 50 lakh. Here the word they have used is receipt. Here the word used is purchase value. So on purchase, if the value of purchase of this invoice is more than 50 lakh, then you have to deduct TDS at the time of credit or payment, whichever is earlier. Here they have used the word receipt. So if you are receiving something, that is, if you are receiving for your sale of rupee more than 50 lakh, then on exceeding 50 lakh, then the value exceeding 50 lakh, you have to collect 0.1% TCS from buyer. Say for example, XYZ sold goods of rupees 70 lakh to ABC Limited. XYZ's turnover in last year is more than 10 crore. So at the time of sale, you are not required to collect TCS. At the time of receipt, at the time you receive the payment, you will have to collect TCS. Now say for example, during previous year 22-23, ABC Limited will pay 55 lakh to XYZ Limited. The payment is more than 50 lakh, yes or no? Yes. So on exceeding 50 lakh, that is on 5 lakh rupees, XYZ Limited have to collect 0.1% TCS from ABC Limited. Everyone clear with this? Yes or no? So here it is responsibility of XYZ Limited to collect 0.1% TCS from ABC Limited on amount 5 lakh rupees. That is the amount more than 55 lakh. Is that clear, everyone? Yes or no? Yes or no? Give your response quickly. As a seller, last year my turnover is more than 10 crore. In current year, I sell some goods to some party amounting to rupees 70 lakh. And during current year, the party pay 55 lakh to me towards the sale. So the Sale price receiving is more than 50 lakh. Okay, so on exceeding 50 lakh, 5 lakh I am receiving. Yes, on 5 lakh I have to collect TCS from ABC Limited. Clear, Dhyanesh? Say for example, during previous year, ABC Limited will pay 35 lakh to XYZ Limited. Do I need to collect TCS as XYZ Limited? Yes or no? Yes or no? Total sale receipt turnover. See, यहाँ पे you have Anand. यहाँ पे you have to see only receipt, not the sale price. But yes, as a seller, you have to check whether the last year turnover is more than 10 crore. Then only in current year you have to collect TCS. Otherwise, irrespective of amount of receipt, you are not required to collect TCS if in last year your turnover is less than 10 crore. Here the TCS is not required to be collected. Why? Because the receipt is less than 50 lakh. Say for example, in last year, turnover of XYZ Limited is 9 crore. And in current year, they receive 70 lakh from ABC Limited. Whether TCS is applicable, after 50 lakh, whatever amount you will receive, you have to collect TCS. So if the balance amount of 15 lakh they will receive, they have to collect TCS once during the year the limit of 50 lakh exceeds. On entire receipt during the year, matlab exceeding 50 lakh, whatever amount you received in installment or in lump sum, you have to collect TCS. Chalo, in this case, TCS is applicable. No, the TCS is not applicable. Why? Because the turnover of Mr. of XYZ Limited in last year is 9 crore. Everyone clear? Now what happened? It is very interesting. XYZ Limited turnover in last year is 12 crore. ABC Limited turnover in last year is 15 crore. In current year, ABC Limited sold goods of rupees 70 lakh to ABC Limited, and ABC Limited pay full amount of 70 lakh to XYZ Limited. Everyone clear my question? XYZ Limited sold goods of rupees 70 lakh to ABC Limited, and ABC Limited will make payment of 70 lakh to XYZ Limited. Yes, TCS is over and above the above receipt. Now what happened here, my dear friend? Whether you will apply TDS or TCS, here both is applicable. See, from the perspective, XYZ Limited is a seller and ABC Limited is a buyer. So from ABC Limited perspective, 194Q is applicable. Why? Because the turnover of ABC Limited in last year is more than 10 crore. ABC Limited made purchase from XYZ Limited is more than 50 lakh during the year. So ABC Limited is required to deduct TDS under section 194Q on amount of rupees 20 lakh, that is exceeding 50 lakh at the rate of 0.1%. Now from seller perspective, it is not set of more, but wait for a minute. From seller perspective, 206C, 1H applicable. Why? Because XYZ Limited's turnover in last year is more than 10 crore. In current year, XYZ Limited received more than 50 lakh from his buyer, their buyer, that is 70 lakh. So XYZ Limited will have to collect TCS at the rate of 0.1% from ABC Limited. So there is a double taxation. ABC Limited will deduct TDS at 0.1%. XYZ Limited will collect TCS at 0.1% on 20 lakh. So in this case, if the buyer is required to deduct TDS under section 194Q, then the seller is not required to collect TCS under section 206C1H. So in this case, both section is applicable. Therefore, TDS override the TCS. So here, only and only ABC Limited will deduct TDS on 70 lakh and XYZ Limited will not collect the TCS. But XYZ Limited have to take a declaration from ABC Limited that the TDS is deducted by ABC Limited. That's it. Everyone clear with this, yes or no? In case TCS and TDS both are applicable, you have to apply TDS and not the TCS. So for that, you have to check whether both sections are applied or not. If only one section is applied, then there is no question of double taxation. Say, for example, in this case, the turnover of ABC Limited is 3 crore. In last year, say, for example, it is 8 crore instead of 15 crore. Then only the TCS section is applicable. Why? Because in case of ABC, 194Q is not applicable. So when both the sections are applicable, then you have to apply TDS and not required to collect TCS. Everyone clear with this? This is the section 194Q. Rate of TDS 0.1%. No, Vedant. XYZ is in this case AB. If the ABC Limited is if ABC Limited deducted TDS, then the XYZ Limited is not required to collect TCS. Okay, there is no double taxation. CBDT has given a circular that if the TDS and TCS both are applicable, then only the TDS is deducted and not the TCS. Yes. Vimal Kumar, do you have any doubt? Yes or no? Now the component of GST comes into picture. If an invoice, the GST amount is separately shown, then the TDS is required to be deducted on only basic amount. As the TDS is required to be deducted on payment or credit, whichever is earlier. So if you are generating an invoice, then the TDS is required to be deducted on basic amount without considering the EGST. But if you are receiving an advance, so you have there is a confusion that on advance how much amount is towards the GST. So in that case, if you are receiving an advance, you have to deduct TDS on entire amount. Why? Because on advance, the advance is earlier. Credit is later. Okay, so you have to remember on advance, you have to deduct TDS on entire amount. If it is more than 50 lakh, obviously. And if you are issuing an invoice that is credit is earlier event, then the TDS is required to be deducted without considering GST. Anand, ABC Limited will receive the invoice, na? On the basis of invoice, he will pass the entry in the books of account. So he will deduct TDS at that time. Yes or no? Clear, Anand? No, my dear friend. If here the 60 lakh, see, if the TDS is applicable, then TCS is not applicable irrespective of amount. So only in case of double taxation, TDS is applicable. That's it. That you have to remember. If ABC is not liable to deduct TDS, then only the XYZ has to collect TCS. That is the only one case, that is the applicability of TCS and not the TDS. If, see, 194Q is not applicable, then there is no question of double taxation. The question arises only when both section is applicable. Dhyanesh, I didn't get your question. My dear friend, TCS is collected and deposited to government and the credit of TCS is available to the buyer. It is not the income of seller. To track the record, to track the transaction between two major parties, they have implemented this section. See here in first part, they have said that it is applicable to only residents. So if the buyer is non-resident, then the 194Q is not applicable. If Piyush, then TDS is not applicable because the base value of purchase of goods is less than 50 lakh rupees. You have to ignore GST component. That's it. GST is a tax. No, it is not included in your income or not included in your expense. So you have to ignore GST component. It is not possible that buyer did not agree to deduct TDS. It is his responsibility, and if he failed to do so, he has to pay interest, penalty, etc. If the seller's income is exempt, then TDS is not required to be deducted. Why? Because the income of seller is exempt. TDS is also required to be deducted on advance payment because the credit or payment, whichever is earlier. If it is the first year of your business, then 194Q is not applicable. Why? Because in last year there is no business. Okay. Vedant, both is not applicable. If buyer deducted TDS, then the seller is no. We do not have to include GST in turnover. Vedant, if the buyer deducted TDS, if the sale price is more than, if the purchase price for buyer is more than 50 lakh, then the seller is not required to collect TCS at all. It is possible when the, see, when, if this is the case, then only both the provision are applicable. Say for example, as buyer, Mr. B's turnover in last year is 9 crore only. Then in that case, buyer is not required to deduct TDS. So in that case, XYZ Limited have to collect TCS. Clear, Vedant? One 194Q is applied if the turnover from business is 10 crore or less. The provision is applicable if the turnover in last year is more than 10 crore. If it is less than 10 crore, it is not applicable. This is the general question answer given, which I have already explained where the both the provisions are applicable. Then what happened? Okay, so you have to read this once. Now that let us discuss the illustration number 12 for better understanding. Mr. Gupta, a resident Indian, is in retail business and his turnover for financial year 21-22 was 12 crore. So we are calculating for financial year 22-23. So in last, that is in financial year 21-22, his turnover is 12 crore. He regularly purchased goods from another resident, Mr. Agrawal, a wholesaler, and the aggregate payment during financial year 22-23 was 95 lakh, that is 20 lakh, 25 lakh, 22 lakh, 28 lakh. Because they have provided the threshold limit to stop. See, there is a lot of purchase sale transactions. So if they have not provided the threshold limit, then it is difficult to maintain the books of account and everything. There is a implementation problem. Assume that the said amount were credited to Mr. Agrawal's account in the books of Gupta on the same date. Mr. Agrawal's turnover for financial year 21-22 was 15 crore. Yes, then both these not applicable. Simple. You have to apply the provision. If the conditions are not satisfied, provision TDS is not applicable. Chalo. Based on the above fact, examine TDS, TCS implication, if any, under the Income Tax Act. अब यहाँ पे, in this case, Mr. Gupta is a buyer. His turnover in last year is 12 crore. Mr. Agrawal is seller. and his turnover in last year is 15 crore. Mr. Agrawal made payment So Mr. Gupta has purchased the goods from Mr. Agrawal and made the payment of 95 lakh rupees to Mr. Agrawal. And here it is given that the same amount that is credit, Mr. Agrawal's account is credited in the books of account of Gupta on the same date. So obviously they have purchased goods of rupees 95 lakh. See, my dear friend, here both provision is applicable. In case of Mr. Gupta, 194Q is applicable. Why? Because in last year, his turnover is more than 10 crore. In current year, he purchased goods more than 50 lakhs. So on 45 lakh rupees, Mr. Gupta has to deduct TDS at the rate of 0.1%. Now, as a seller, Mr. Agrawal's turnover in last year is more than 10 crore. In current year, he received payment of rupees 95 lakh, that is more than 50 lakh from Mr. Gupta. So 2061, 206C 1H is also applicable. So in this case, 194Q is applicable and 206C 1H is not applicable. See. So in this case, Mr. Gupta is required to deduct TDS and Mr. Agrawal is not required to collect TCS. See, in the first case, that is there are different dates given. Okay, so first purchase was made on for rupees 20 lakh. So the value is less than 50 lakh. So on 1622, TDS is not required to be deducted. Second purchase made on 12th August, that is 25 lakh. TDS is not required to be deducted because the value is less than 50 lakh. On third purchase, 22 lakh, that is on 23 November 2022, the purchase exceeds 50 lakh. Okay. So, on 17 lakh, the TDS is required to be deducted on 23 November. How come 17 lakh, 22 lakh minus 5 lakh 45 already ho chuka tha? Okay. TCS is not charged Vimal Kumar here because the buyer is deducted TDS. So TCS is not required to be collected. And yes, TCS is charged in sale. Would your answer be different if Mr. Gupta's turnover for financial year 21-22 was 8 crore? Yes. So in that case, Mr. Agrawal will collect TCS. See, on the same dates when the amount is exceeds 50 lakh rupees, at that time he will collect TCS and Mr. Gupta is not required to deduct TDS. Why? Because in last year his turnover is less than 10 crore. Would your answer to 1 and 2 change if PAN has not been furnished? Here, my dear friend, if the PAN is not furnished, we will discuss that section 206AA. If the PAN is not provided, then the rate of TDS is 5% instead of 0.1%. Higher rate of TDS is applicable, that is 5%. Clear? So in first case, if Mr. Agrawal has not provided his PAN to Mr. Gupta, then Mr. Gupta is required to deduct TDS at the rate of 5%. And in second case, if Mr. Gupta has not furnished his PAN to Mr. Agrawal, then Mr. Agrawal will collect TCS at the rate of 1%. In case of TCS, higher rate is given is 1%. In case of TDS, higher rate given is 5%. Everyone clear with this? Just go through this section. If you have any doubt, just let me know. We have completed the 2 provision 194Q and 2061H. In case of TCS, you understand correct. The seller will collect the TCS on an amount in addition to the receipt. In case of TDS, buyer will deduct the TDS on invoice amount. That is, say for example, if he has to pay 52, if the invoice is 52 lakh rupees, then he deduct TDS on rupees 2 lakh, that is 20,000, and he will make the payment of 51 lakh 80,000 to the seller. and 20,000 on seller's behalf, he will deposit the same to the government, and the seller is able to claim the credit of that 20,000. Clear, Dhyanish? Chalo, everyone just go through. I'll give you 1 minute. If you have any doubt, just let me know. Clear, everyone? Kavita, Petladwala, Alok, Dhyanesh, Uday, Vedant, Piyush, Anand. Clear, everyone? Yes or no? Please let me know. Yes or no, everyone? Please reply. You all have to revise the provision again. You have to do. Yes, yes, it is for business. And you have to do all the homework. That is whatever question we solved in the session. You have to write down the same in your notebook. Okay. And if you are having any doubt, then while revising, then let me know. We will discuss in next session. Okay. Have a good day, everyone. Thank you. Please end the session.